Go Eagles. Welcome to FACE. Nice to meet you, Raphael. Hi, Patrick. Happy New Year. If you weren't here yesterday, how's everyone doing today? Okay, so pretty big decline we've had in the dollar over the past couple of weeks. We are getting a bounce here in the dollar. Euro leading the way to the downside over cable. I look at this low though, a lot of momentum down here. This is not the type of low that I expect. Let's see, what's the RS reading? Under 20 down here. I believe this is a 1 hour time frame. So maybe there's a little bit more left. I don't think there's much more than 92.80. Maybe there's more than a 1 day pop in the dollar here. I still don't view this as the bottom. I know some people are saying it is. Be pretty contrarian, especially after this gap. In fact, do other people have gaps on their charts here? Off the Dixie that we gapped down last week. If so, the gap is filled at 92.57, so that would be another 50 pips up here. If that's the case, I would sell any rally into the gap. Still expecting the low of the move to be washed away at 91.01. I guess some people could say it's still a higher low, and this was the bottom, and we could start heading up here. That would be a surprise to me. Still think there are lower numbers ahead. You guys have a gap there? Anyone in the house have a gap on the Dixie chart like I do? Just give me a Y if you do. Okay. And what is the charting platform you use? Your MT4? Is it off your MT4 or off this? Okay. All right. Now oil is starting to get a little closer to it fulfilling its weekly target. Okay. 62 has been a number in my head for well over a year. We're only about a day away if it continues to accelerate with some of the tensions happening in the Middle East, with what's happening in the streets of Iran. What's different about what's happening in the streets of Iran this time, it's not just the student population, the learned type of city dweller in Tehran. It's happening across the country. It's a little different revolt. They're revolted by their standard of living, and that's what usually takes people to the street. And it's not just in Tehran, it's nationally in Iran. Kind of plays into some of the things that Kirk Spanos was talking about last year, and Trump's drumbeats, and this zone that we're in. So keep your eyes on Iran. Something could happen there, I think, by this spring. That's what Kirk said. So keep your eye on it. But I think after 62, 63, there's going to be a pretty good pullback in here. Between sometimes in the commodity complex, guys like me were taught about something called the February break. Anyone hear about that before? The Feb break. It is what it says it is. And commodities have a tendency to sell off during the month of February. Okay, so I know we're just starting January, and there's probably more upside, but a Feb break. So looking for a high in the crude, and then looking for crude to participate in a Feb break. Maybe that's when gold peaks sometime later this month and we get a Feb break. Anyway, something to write down, something to be aware of. Used to be a pretty regular phenomena. Now, a lot of these old things that old timers like me look at, some of them don't happen, but some of them there's major economic reasons for it happening that I can't explain because I don't understand it. I'm just aware of that being something in my playbook that I pay attention to, and love to share my playbook with everyone in here. welcome, Raphael. So, you know, I want to ask a question here. How many listening to my voice have been in phase for, say, three months or longer? Give me a Y. Okay, Martin. Figured quite a few and a lot more. Okay. That's many of you. Okay, so here's a follow-up question. I had a cancellation on my guest today. And I think this would be a day that you would remember for a long time in your commodity career, your FX career, and your trading career. I'd like one volunteer out of these Ys that have been here for a while in phase for me to talk to, just have a conversation with at the top of the hour. You could talk to us about, you know, how you got started. You don't have to be, you could be down 30% on your account. We learn from everybody. You could talk about your favorite aspects of this. Okay, Jock. Okay, you got the kids. That'd be all right. We could hear them in the background. We hear the team's kids all the time. Well, I believe, okay, so Martin, tomorrow, I do believe we have a scheduled guest. You want to do it today? Give me a Y if that's today. You're the man if you're volunteering. Okay. So I'm going to be speaking to Martin at the top of the hour. It's going to be great to finally get to hear your voice and talk to you, Martin. I'd like to do this once a week. I think it's, yeah, the Man Award. Kareem remembers the Man Award. It's very good for your progress as a trader to talk about things. They crystallize it for you. I bet the whole team would say that although they're sharing their views every day in here, that it makes them better because it crystallizes what they're thinking. By whatever they're telling you, they're hearing it themselves, and it makes them better, more accountable, and even give a little deeper look at what they're sharing. So it's a good stretch for you to make. You know, it's like, you know, reaching for a new level. You may like it. It could lead to other things. So okay, well, Martin's going to do it. All right, so this should be interesting. I have another member, Luca's going to be doing it in February. So I'd like this to be kind of a regular thing that we do once a week. So if you didn't volunteer today, it doesn't mean that you're not going to have a chance. Think about what it can do for what you're trying to accomplish as a trader by sometimes communicating your ideas to others. Clarify them not for someone else, but also for you. And, you know, what good is anything until it's shared with another? So if you're a great trader and you're holding all your knowledge tight, holding it tight, close to your best, in my experience, sharing what I know has been just as rewarding as making money in the market. So just something for you to consider. So Martin, stand by for the top of the hour. Looking at Euro here, I can't get bearish on the Euro, although it is set up for a potential reversal week, and we took out this high. This high was 2092. I don't think we did. See, so we never took out this high. I was looking at this. It would have been more bearish to me if they had taken the bears out over this top. See this, everyone? Then I would have known it would have been a stop hunt. So this, what we have going here is, even if it pulls back for a day or two, this high, you know what I'll call it, because it did not take out this high. Any guesses? what I would call this high. It would have been more significant to me if it had taken out this high here at 2092.4. The high here was 2081.1. Don't say that about yourself. Say, I'm on my way to being a great trader. All right, so this is giving the shorts all the way from back here, or people that sold this rally and put stops over the high. I call this a hope candle, okay? And hope is great. In fact, I tweet, hope is the oxygen in our lives, but it's also the carbon dioxide in our trading. So the fact that we did not take out these highs is giving people hope that the euro is going to fail from here. I would call it more of a pause before these stops are finally elected. Give me a Y if you understand my analysis. You don't have to agree with it. And maybe I'm all wet and this is a significant high that we're putting in the euro, and we're going to just sell off towards, 116 from here. But this is my view. When markets, it almost sets up, gives me more conviction to be a buyer on the break, that there are still some shorts left. And I know it's a very crowded trade, record longs and the commitment of traders. Okay, so people are saying, well, could be a good short here. They could be right. I still think we're going to take these highs out before it's over. So I blabbed quite a bit, forming a no handle yet. Okay, so is this the cup right here? And we're gonna have a handle, another pullback to form the handle. Forex scale, is that what you're thinking? Okay. Good morning, Steve Volge.
Hey, Dale.
How are you, buddy?
I really have no idea how you ended up in finance. You could have been an amazing lawyer or a writer or even a poet. I think you have wasted talents there, my friend.
Oh, thanks very much, Steve. My mom wanted, when I went to the exchange, after a few months, she said, honey, please get a real job. So,
Really?
Real crazy about my career choice. Moms are always right. Moms are always right. So, but you know what? This business gives people a chance if they're good writers, if they're speakers. It gives you a platform to express yourself in many different ways besides just clicking a button. So,
absolutely.
Absolutely. Thanks for giving me a platform to, share my stuff with people.
It's, as you know, it's our pleasure and our honor having you here, and I'm pretty sure that there is nobody that has a different opinion.
Oh, thanks, man. So here we are, are you thinking this same way, that this little pop in the dollar is going to be fairly temporal?
Listen, I really expected yesterday morning when I was pushing intraday updates, European hours before US session.
Right.
The vast majority of the updates I was pushing for dollar pairs were mostly to indicate that we were approaching some levels that we might get some, some bounce from the dollar, because I really didn't believe that the new year is going to come and some buying interest for the dollar is not going to emerge, after selling it off the past days, the last few days of the month and the year, and the first trading day of the year. So really that comes as no surprise to me. Now the question is what happens from here. Personally, I have no reason to believe that this is going to be anything more than a short-lived bounce. I would have to really see strong evidence to think otherwise. You know what I mean?
Yeah, so if we could see your charts, the levels.
Absolutely.
The levels that would begin to change your mind would be interesting to us, because it could be more than a day. It was a pretty good sell-off.
Of course, it can be more than a day. There's no question about it.
Yeah.
Of course, it can be more than 1 day, but by the way, let me start by, and of course, whoever wants to ask something specific, I would be more than happy to address some questions. I know that Stelio?
Sorry, I was just logging in. Hi, everybody.
Okay. Okay. Welcome. Okay, so we are already seeing a reaction. We got to see levels above 1320 in gold. We're seeing a reaction so far today. Same thing happened with silver. Silver actually came perfectly to retest this 70-20 zone. So, you know, this is a good area, perhaps, to see a reaction from the metals. The euro, as you very well said, got rejected just a few pips before touching the high that we had in September. But in all honesty, for example, let's speak about the EURUSD. I view this as a broken bull flag. Okay, it's a rather large one because, you know, the pole was a rather large one as well. So theoretically speaking, even a retracement lower, even down to roughly 119, 118, and a lot is still just going to be viewed, in my opinion, as a retracement to retest the broken resistance area as support before moving higher. So we would have to actually move more than roughly 150 pips from here for me to start thinking that perhaps this is something different. Okay, now having to do with the cable, as you can see, the cable here has also broken above this extremely significant descending trend line. This is a trend line that dates back to 2014, the summer of 2014. So in all honesty, as long as we are above 133, I also see no reason here. As you remember, I was quite adamant. I insisted on viewing this red channel as another bull flag until proven otherwise. This one here, the one I marked with yellow, we broke above it. You know, even if we do something like this, it's absolutely fine. I mean, that doesn't invalidate like a bullish view. And now, even if we want to go back to the basics, let's go back to the DXY index. We can see here that we broke below a very significant level. We actually also gapped down. So we've left an unfilled gap at around the 9260 area, which was the neckline of this head and shoulders. So even, let me delete this. So even if we do something like this, nothing changes, you know, for the bearish outlook. Okay, so yeah, could we get a healthy rebound from here? Sure, we can. But what would we need to start thinking that perhaps this was a false move lower? Which, of course, there is always the possibility. I mean, this is the market, and you know something. Let me say something. I consider this to be the less likely scenario, but let me say something. If you remember last year, with the dollar and the euro and several other pairs, we found the bottom at the very, very, very few first days of the year, right? So, for example, for me, if my main case scenario, which is for further dollar weakness, got like spectacularly invalidated within the first days of the year, and we saw some like spectacular bullish moves starting out of nowhere for the dollar, I would take notice because of seasonality reasons. So if for some reason the main case scenario that we're going to see more dollar weakness gets invalidated in an emphatic way, I'm going to take it very seriously into account. But as I said, this is not my main case scenario. My main case scenario is that we might see a little rebound, perhaps a retest of this broken neckline. Equivalently, I gave you the EURUSD levels and the pound levels, and then resuming the prior trend. Okay, so until somebody really gives me evidence of the opposite, I'm going to stay with that view. And my market experience tells me that one thing you have to work on yourself is becoming less doubtful about proven trends, because simply turns in a market is something that happens on occasion, while a resumption of a trend is something that most of the times is what we're seeing in markets. Okay, and you also have the third alternative is a choppy environment, in which case personally for my type of trading I just outright avoid these kind of markets. I avoid trading them, and I'm always looking for markets that are either extremely stretched so I can get a good reward to risk opportunity for a reversal, or markets that are that have clearly proved that they're moving at a specific direction and a nice retracement to be buying or selling to align myself from the direction of the trend. By the way, yesterday we had one question about the EURUSD. I remember seeing so, but Blake couldn't address all of them because it was the first day of the year. We had a lot of things to talk about. There was a friend, I don't remember who it was, that asked to mention it today, simply because I still believe that the 120 area, which was the prior floor, is perhaps calling. But on the other hand, I cannot help noticing that this is a very interesting pattern. Okay, so of course, if we break higher, we might see an acceleration, and in this case, I'm pretty confident 120 is going to be around the door. But on the other hand, you see the 50 DMA is also working very nicely, providing support in this ascending triangle. If we see a break below here, that might come, of course, only if we see some risk off coming in the markets. That would be something of significance. So I'm closely monitoring this pattern for the friend that asked about the EURUSD, because we will soon have developments. I mean, this is a pattern that's contracting, and sooner or later it has to break out. Rio is asking, buy silver, sell gold. I would actually no, I haven't really considered lately if I would be willing to trade the differential of the two of them. I mean, would I be more bullish silver than gold? Last year, 2017, gold overperformed silver by a decent margin. So I would probably wait for a little bit longer before I say that this is a different year, and we might see some silver overperformance. One thing is for sure, especially silver is currently on a risk. Outright, I would definitely not be buying silver up here, especially given the prior move that we had, which is 10.5% move roughly within 14 trading days. That's already a huge move, right? And being on a resistance at the moment, I would be rather skeptical. From a reward to risk perspective, selling up here with a stop loss, let's say above the 1736 high, is probably a much better idea for a short-term trade. Now, on the other hand, if we break above there, it's a different story, although just zooming out and seeing how choppy price action has been, there is nothing that can happen within this large range that would get me seriously convinced that, oh, this is it. We found the bottom. We're finally headed higher. And I'm telling you this despite, whoever has been listening to us for a long time, they know that both Stelios and I are quite bullish on the long term on precious metals. So my macro thesis tells me that I want to be invested in metals. I just don't see the technical opportunity to do so right here, right now. Okay. Abdul, we already had a look at the cable and the euro. I'm sure that Blake is going to go over them again afterwards, but you can always check out the recording that's going to be posted a few hours later on YouTube, on our YouTube channel, on the ForexAnalytix YouTube channel. Martin says, okay, Martin, you're going to be speaking afterwards, so why don't you show what you've seen having to do with the gold-silver ratio? That's a good topic of conversation with Dale. Okay, let's have a look now at the DAX. Just a review on my positions. First of all, I closed my DAX trade for a minimum profit, like 0.64%. I had 3 entries here. The reason being that I'm still not seeing a convincing daily close below this zone, this support zone. And theoretically speaking, having registered a new low yesterday, we have met the minimum requirements of an ABC. Okay, and I always explained explicitly that I believe that this move that I was looking forward to perhaps taking us down to 12,500, I was viewing this as a corrective move. So I took like very little profit and got out of this because I don't like yesterday's candle, this hammer candle. I don't like it at all. Okay. And now I'm only left with 2 positions. One of them is USD NOK, in which I wrote in the chat room yesterday. I closed another third of my position yesterday at 8.13. It was. I made quite a nice profit there. I'm now holding only 1/3 of my initial position, and I will be willing to add back to it if we make it back to 8.21. Okay. And the other position I have is the spontaneous, not exactly spontaneous, but it was like more of an intuition position that I got yesterday, being short gold from $3 below here. Obviously, if we violate today's high, I'm out. Otherwise, I would like to see it back to $1,300. And you know, I'm going to book my profits there and, you know, call it a decent, let's call it a scalp. For my standards, you know, a 1-day trade is, or a 2-day trade is a scalp. So so that's it. I don't have anything else to say. I'm looking forward to opportunities, you know, to starting putting more positions back now that the new year is here, but I'm not going to rush into it, you know, unless I see something that stands out for me. I mean, I don't want to push myself into positions just to have positions. I want positions, you know, to make me feel good about them before I establish them. And usually I'm tracking something for some time before I even put it on my trading list. So other than that, if Blake isn't here, I'm open to see USDCAD. Do you still believe in one leg? Yep. Let's have a look at the USDCAD. That's a good question, actually. The USDCAD has been moving quite nice. Listen, for the USD, I can tell you, since the beginning, I said that, you know, a break below this is going to be significant because the next real area of support I have in my charts, because I do like fibs, especially when they confluence with other things I'm monitoring. But for me, you have always noticed that on my charts, I have horizontal resistance and support areas, right? So for me, those are more significant than fib resistances and supports. And if they coincide with some of them, even better. So the area I'm monitoring is this one. Let's call it 124.35. So for me, I know that the 50% fib is at 124.90. We're almost there. But, you know, this 124.40 area is even more important for me. I would really want to see if we're going to get a reaction from there. If we do get a reaction from there, then we can discuss probabilities. Is it going to be something like this?
Nice look, Steve.
Is it going to be something like this? Thank you, Dale. Which is likely.
How about we go down there and then we get either equality or maybe 61.8 of that first rally, and they finally get to the area you wanted to sell it at last year? Might be. But I want to remind people something. Even when we were moving down here, if you remember, I was quite successfully tracking both USDCAD and USD NOK, and I said that at some point, you know, at a new low, we're going to have a deeper, a stronger correction. And I always maintained very strongly that any strong correction higher is
going to be just a correction and we're going to see new lows in the USDCAD. So that view hasn't changed for me. The reason this view hasn't changed for me is because you always need to have the big picture in mind. What is the big picture? It's the weekly chart, right? So I really do believe that at least in a quality target A, B, C, that's down at 115.64 might be in the cards. So I have to tell you that even though nobody can tell you that this won't happen, right? What I'm drawing up here, first of all, I think that this is a lower probability now that we've gone down here. Second of all, even if that happens, I will still be looking for opportunities to sell the USDCAD. I lost this trade because it was during the last days of the year, and I didn't want to commit to new trades. And I was really hoping, I said it many times in the webinar, I was really secretly and openly hoping, actually not secretly, that we're going to get a push above this range, get people very long on USDCAD, so I can start selling it at this area of resistance, 130, and add to it at the 61.8 at 130, 130. I was really hoping for that scenario to manifest, and I would be all over it. Unfortunately, it didn't do this favor to me. So although I always liked it for a resumption to the downside, I never got the opportunity of joining, but I'm still not abandoning, because, for example, if we see a rebound, a retest of the range and a failure, I'm going to be selling it. I'm telling you already. And in general, I'm looking for opportunities to sell it, but I'm not going to sell it after so many days of weakness. Okay. So that's exactly how I view the USDCAD. Blaker, are you with us, mate? Blake, I see that you are unmuted, but we don't hear anything. You want to check if your microphone is muted from a button or whatever? You seem to have an open mic, but no sound is coming through.
Test.
Yeah. Now I heard you. Yes.
Hey, how does my sound sound?
It's like you're far away. Any chance you've chosen like your mic? Any chance you've chosen like your camera's microphone instead of your headset microphone?
Yeah. How's it? Does this
better? Yes.
Yeah. We have I installed the a Bloomberg keyboard, so it messed with my audio stuff.
Now you sound perfect. So. Now you sound perfect.
Okay. Yeah. So good morning.
Good morning, mate.
Have you learned to play any good tunes on that keyboard?
No. Not that type of keyboard. Not that type of keyboard. It's been a while since I've used a Bloomberg, and so one of the reasons why I went to the Northeast just before the holidays is to get some training on the machine, and it was a good training. But I mean, I'm only scratching the surface. You forget how powerful these systems are and how much information there is. And like I haven't even got. I'll have to go back in a few weeks and do some chart training on how to use the Bloomberg charts. And I'm getting I've been messing around with them, and but there's so much stuff. I mean, there's so much to do, and it's it's a big learning curve. By
the way, Blake, I know a lot of people a decent amount of people that have Bloomberg, and very few of them actually use charting on Bloomberg. Because, for example, you'll see, probably you already know that, for example, TradingView is much easier to chart on, and you can make much better looking charts. So I don't think it's necessarily, the best idea to chart on Bloomberg. Oh, of course, whatever you learn is a good thing, but I really dislike the charting packages of Bloomberg. It's a little bit clunky and slow.
I disagree. I mean, I like what I've seen thus far, and it's vastly different than what it looked like, 15 years ago. I mean, it looks completely different.
Okay, mate.
And
If
the functionality is,
for you.
yeah, I mean, and you can see, like, just for example, like, being able to monitor things like this. You can see,
we still don't see your screen, by the way.
You'll see it momentarily.
Now we do. Yeah, now we do.
Yeah, and being able to monitor, all the instruments that I want to intraday, it's good, and it's I enjoy it. It's not necessarily, what I want to use on an intraday basis when I'm looking at my let me see here. I'm just going to go back to however I can change this. Which screen? Let's see. Oops, that I didn't want to do. Give me a second.
I must say, guys, I used to use Bloomberg for around 10 years. I think I used 10% of its capabilities. It's so vastly complicated.
It is, and it's great, especially if you trade equities. There's so much information and so much information you can find on different companies. For what we do in the currency market, it's more about looking at other markets, not just currencies, but other markets, being able to see the news, read into analysis on the different currencies, and look at yields and what yields are telling us, from different countries, which one of my other screens is, that's all it is. So, and breaking news as it's happening, and Squawk Box that I have running, it's, those are all, they're all nice little features to have, but getting my head wrapped around all of it, there's a lot. So, with today, we have a couple of big events that are happening. We have the FOMC meeting minutes, which will be a little bit later. And the market, I don't know if we're going to see a huge reaction from the FOMC meeting minutes. I think the market is expecting, fairly hawkish minutes. Just to reinforce that the possibility of 3 rate hikes going into 2018. I think that's what the market's going to be looking for. But I think the actually more important data is going to be the ISM data that we get here in the next hour and 20 minutes. The ISM has been very strong and continues to be strong. But as we go into 2018, the question I think a lot of people are going to be asking is, what's the employment picture and how strong is the economy going into 2018 after this prolonged expansionary period? So, I think it's important that we take a look at some of these dollar pairs, which, I don't have any dollar trades on. I did buy the US dollar Mexican peso earlier this morning. If you use ForexAnalytix, there was an update right when the US dollar Mexican peso hit the support. Here is the breakout point, and I actually picked it up. Anybody that was in the chat room, was around when I picked it up right here at 1937, and I sold it at 42 already this morning. Just got in and out really quick. Actually, on the spike right here is just about 20 minutes of a scalp. And you might have recalled me talking about this yesterday. I was looking for a move back down here to this breakout point because I don't think the US dollar Mexican peso is over. I don't think that this move is over yet. So I picked it up, already sold it. I'll probably rebuy it again, especially if we come back down here and dip back into support. But I don't have any dollar trades going right now. I heard Dale a little bit earlier talking about he would have felt a little bit more confident if we would have hit highs first in the euro dollar before reversing. I wholeheartedly agree. I still think that the euro dollar has the potential to reach this 121.60, 121.70 before it's all over, before, you know, we see any, you know, even potential for a turn. Now, obviously, I could be wrong here, because we could set up a nice double top, because this is basically matching those highs. I mean, we're within, you know, I don't know, 5 pips maybe of those highs here. So maybe we do set up some sort of double top, some really key resistance. And I think in the event that we drop back through, you know, this support right here, which is 119.65, if this is broken, so in other words, if and here, let me grab my pen really fast. If it, whoops, didn't want to do that. No, let me move this calendar over. I'll need that for now. Yeah, just crap all over the place. I've got like, you know, Bloomberg screens everywhere. So if we drop through here, you know, I would expect us to bounce. This would be a good probably place to pick up the euro. But if we break through here, this is where I would think, okay, you know, maybe there's a big longer term double top forming. So that comes in at like 1965, somewhere around there. And there's a lot of you know, potential for a continued drop here, you know, before we rally. And ultimately, if I'm going to sell the dollar, I'd like to buy the euro down there. That's how I view it at this point in time. Not saying that we're going to get there. I'm just saying that if we do, if we even get that opportunity. Yeah, I mean,
yeah, I like it.
Yeah, and you know, I don't want to get too terribly excited about the dollar at this moment, because I'm especially ahead of the ISM number. I don't think it makes a whole lot of sense to get too aggressive, and maybe even you know, ahead of the FOMC meeting minutes. The cable's had a nice move lower. We had a weaker PMI data out of the UK, so we had the construction PMI came in a little bit weaker than expected. That might have been a good reason just to take some profits here out of the cable, you know, for the market. You know, all in all, the 127% extension of this range, it really, you know, rejected there, and we had a 4-hour, you know, look at how overbought the 4-hour was. So it makes sense that we're correcting. Question is, do you want to buy it here, you know, at the breakout point? You know, I'm not super inclined to do that, but you know, it's potential. You know, I think some people are, you know, looking at it as, you know, maybe this is a good place to pick it up. The Aussie dollar has been really strong. Now I should get rid of this blue line here. This blue line is probably pretty key. It was in the past, but I don't think we really need it at this moment. If you look at the Aussie, look at the daily RSI. I mean, it is in, you know, it is extremely overbought at this point. But I don't think we can rule out a move to this 79 cents or 78.80. I think this is quite possible, especially if we see some continued dollar weakness today. And by the way, that's a big talk of the town right now. Everybody's just talking about this, you know, dollar weakness that we've seen, continuous dollar weakness that we've seen going into the new year. You know, it's going to be interesting after today to see if it continues to persist. But you know, dollar tried to make a turn yesterday, but you know, I look at the Aussie, I still think that we can make our way up here. Kiwi too. You know, the Kiwi, I'm looking for a move towards the 50% retracement here, which is 71.60. I actually set up a little alarm there to get notified in the event that we make it up there. We are stalling around the 200-day moving average right now. You know, I think we can still make it up here just a little bit further. The dollar Swiss is getting a nice bounce after, you know, several days, several down days. But, you know, the thing I have to point out about the Swissy, okay, the Swissy may be getting a nice bounce at this moment, but we also have, you know, we've managed to do a, you know, lower low and lower high. So, you know, if the Swissy makes a bounce back towards like the 98.50 level, this is going to be a great opportunity, in my opinion, to be on the short side of the dollar Swiss. Again, I want to preface that that potential trade with the idea that equities are stronger And, you know, if we're going to see some sort of turn in the equities markets, I would assume it's within the next couple of days. Meaning that, you know, I'm not saying, oh, this is going to be the start of a 20% correction. I'm just saying that, you know, if we're going to get a move lower in the equity markets where we get some sort of, like, you know, just a little moderation from where we've been, you know, we might hit new highs today and then come back down and, you know, and start a little bit more of a near term corrective measure in the equity markets. Then the Swiss franc is not a bad idea as far as a long trade for short-term risk off, meaning that the Swiss franc could actually perform a little bit better should we see some sort of risk off, and that's why I'm not opposed to actually waiting for a bounce here in the dollar Swiss and selling it if we can get it. I'm not sure if that's exactly what's going to happen. That's just, you know, what I'm thinking about at this point. Steve was talking about the U.S. dollar Canadian. The U.S. dollar Canadian is near the 50% retracement. Relative strength is very divergent. We noted it yesterday. If you were looking or trading with ForexAnalytix yesterday, the U.S. dollar Canadian intraday, we said the U.S. dollar Canadian hit a new trend low, but the 50% retracement is at 124.90 level with the 4-hour RSI divergent. We could see a bounce there, meaning that we could see a bounce. Where's the 4-hour that I was pointing out? Right here at 124.90. Now we made it to 124.98, and we're showing a little bit of potential for a bounce, but not enough that's exciting to me. But I agree with what Steve was saying a little earlier, because I heard what he had to say. If we get any move back up here, you know, towards the 126 level, this is going to be a great opportunity to be on the short side of the dollar Canadian. And again, I'm thinking today that we might get a little bit of a dollar recovery, but I'm looking to, you know, sell a dollar recovery. So, you know, again, if the euro dollar, you know, pulls back and it drops below the 120 level, you know, towards that 119.60, that may be an opportunity to be on the long side. Similar with the U.S. dollar Canadian. If we get a bounce in the dollar Canadian back up towards 126, maybe a little bit above that, I might be looking to play the dollar on the short side and short some U.S. dollar Canadian possibly. The U.S. dollar Norwegian krona is trading extremely heavy. I mean, this thing, you know, the Norwegian krona is extremely strong right now, and surprisingly, it is not showing any type of bounce. U.S. dollar Swedish krona as well is trading fairly heavy, meaning the Swedish krona is strong, and then the U.S. dollar Mexican peso. Like I said, this is probably fairly critical support for the U.S. dollar Mexican peso down here. Matter of fact, I might buy a little bit right now. Just picked up just a hair bet down here. I like it as long as it's trading above this 136. I'll pick up these dips here. And the U.S. dollar Mexican peso is also one of those currencies that, you know, if the market goes, you know, sees a little bit of, you know, selling pressure, you might see some, you know, emerging market currency weakness. So I don't mind being long the U.S. dollar Mexican peso down here, and just, you know, little positions. Obviously, I don't want to get too aggressive as we're coming down. Let's also talk about the dollar index. So the dollar index, you know, got beat up yesterday. We're basically holding the 78% retracement, but this is very similar to every other dollar pair that we're looking at. You know, on a dollar bounce, if we can get a dollar bounce towards this 92.50, I think this is going to be the place that we want to look for, you know, some opportunities to sell the dollar. But I think the dollar is capable of bouncing, especially with the ISM, which, like I had mentioned, continues to stay strong, but also with the, you know, possibility of some hawkish FOMC minutes today. I think it gives the dollar the potential to rally. Oh, one of the currency pairs that I do want to talk about is the U.S. dollar Japanese yen. Now, the U.S. dollar Japanese yen, I had orders to sell the U.S. dollar Japanese yen at 112.50 overnight, right up here, you know, like a retest of the underside of this trend line here, right around here, I'm still not opposed to that. I'm still not opposed to selling the dollar yen on a rally if we can get it. And that's because I am still short some New Zealand yen, which I'm, you know, up a little bit, and I'm short some Aussie yen, which I'm basically flat right now. So I'm still in the camp of playing the yen on the long side, just as long as I can, you know, get a little bit of a pop here on the dollar yen. I wouldn't mind playing it to the long side personally. Now, let me see if I can address some questions really quick. Looks like Forex Gal wanted to see the US dollar, Swedish krona. And guys and gals, if you have anything that you wanted to see over the next 10 minutes before I hand it back off to Dale, make sure you let me know. Abdul asks the pound Aussie and the pound New Zealand. Now, the pound Aussie and the pound New Zealand, let's take a look at those really quick. The pound Aussie, let's start there. We had some really key support come into play last week. Right through here. Okay, this is here, let me grab my pen again. So you can see right through here, this is a 618 retracement of the low to this high. Okay, 618, 127% extension of this low to this high. Okay, so we have a fib confluence that came into play. Now, obviously, the pound's under a little bit of pressure at this moment, but as long as this holds, as long as that holds, then, you know, I think the potential for a rally back towards, you know, 176 is possible. You know, we come back up here. All right, so rally back up towards the underside of that trend line. I think that's very possible. And the same really is the analysis with the pound New Zealand. I bought this yesterday. Yesterday I bought it here, almost like right where we're at. I think I bought it at 190.70 and I sold it at like 191.20. I didn't make very much. I just made this little green bar basically, as I just scalped it to the long side. But you know, obviously it's back down under pressure. Let me see really fast if we let me see something. So we came out of this descending wedge, right? See, we didn't even hit the 38% retracement of that move. Now, we might have hit the 38% retracement of that move. No. Yeah, we didn't even get up to the 38% retracement, which is a little concerning that coming out of a descending wedge, you should be able to hit at least a 38% retracement, which we came pretty close to. I mean, but we should have made it to like 192.50 or close to that. But, you know, all in all, the pound New Zealand is still, you know, it's still holding up pretty well. I mean, it's, you know, we've completed a lot of, you know, like the cup and handle pattern here had completed, which we were on the long side way back here in the end of October with the patterns in play and made a lot of this move. But you know, I like to just like I did yesterday. I like to buy it on dips. I'm a little nervous about this daily candle. This isn't too pretty, but we've still got a lot of time left in the day. And frankly, the Kiwi dollar it's underperforming. If you look at the Aussie versus the Kiwi Kiwi actually looks pretty strong. So the Kiwi is underperforming. So if you're going to have an opportunity to play the pound New Zealand or the pound Aussie, that pound New Zealand's probably the better trade right now, because you can see the Aussie New Zealand is through, you can see right here, it's through the 38% retracement. We broke that downtrend line. The Aussie New Zealand looks like it's heading back towards 111. So if you want to play, you know, the New Zealand short or the Aussie short, probably the New Zealand, playing that to the short side makes a little bit more sense at this moment. Okay. Speaking of which, let's take a look at a couple of these other, you know, cross rates like the Euro New Zealand and the Euro Aussie. And by the way, again, if you guys want to see anything in particular, make sure you make sure you let me know here in the next few minutes. So you can see the Aussie New Zealand, or excuse me, Euro Aussie actually had a nice rejection from this makeshift channel. It's not the cleanest channel in the world, but we noted it last night on the Euro Aussie analysis for ForexAnalytix. You can see right here. It's following a loose down channel, and you know, meaning that as long as this wasn't as long as this was respected, we'd probably turn lower, and we did. We turned lower, and so we've got that means that this resistance is very important at this moment, okay, for the Euro Aussie. Okay, that's an extremely important resistance. If we break through that resistance, that would be a fairly bullish event for the Euro Aussie. And you know, I look at like the longer term charts of like the Euro Aussie, the Euro New Zealand, and we have to keep in mind, like in the Euro Aussie, for example, this is a great, you know, display of like the weekly chart. As long as we remain, let me move this a little bit. As long as we remain above 150, you know, your bias has to be, you know, try to buy it on some dips. If you can find a decent dip in the Euro Aussie, then you probably want to buy it. Like in this example, I wouldn't be opposed to buying the Euro Aussie. Let me see if I can get a better, like you know, at this 50% retracement, maybe down at like 151. You know, if we can get a move like down here, I'd probably be really interested at trying to buy dips down to that level. I know you're probably thinking, well, you know, that's a couple hundred pips from now. Yeah, it is. But again, I'm taking into account the longer term bullish breakout of the Euro Aussie and the fact that we broke this multi-year trend line. You can see this high, that high. You know, so dips down towards 151. That's going to be, you know, a great opportunity, in my opinion, to be on the long side. Euro New Zealand. You know, this is one of those too. If you look at the weekly chart here, the Euro New Zealand, I mean, there's a lot of upside in the Euro New Zealand, especially taking into account that we're, you know, not too far off of channel support. So channel support looking like this, okay? And again, I think that an opportunity to be long the Euro New Zealand, you know, if we dropped down towards 167, that might be a great opportunity. Are we going to get down there? I don't know. You know, we're having a hard time, you know, making lower lows. You can see we're pretty consistently making these lower highs here. So, you know, getting a move back down here to 167, I don't know if that's really going to happen, because especially if we break through 171. Then we know that this channel maybe isn't so much a, you know, as clean cut as I thought it was, and maybe it looks something more like this. So we'll have to see. But I'm looking for more extreme dips to be long down there. Craig says, want to sell the Euro Aussie to 151. Yeah, I mean, you could, you know, as long as this isn't violated, you know, you could be on the short side here, but if we violate this, you know, 154, 154.50, then you might have to change your tactics. That kind of rules that out. Last but not least, Abdul asked about the Euro Yen. You know, the Euro Yen, we talked about this yesterday about hitting the 127% extension, and it rejected here. I'm really more concerned right now with the 134.50. In the event that we break through 134.50, then that is going to set up, in my opinion, a false breakout on the weekly chart. So I'm not too keen on trading the Euro Yen right where we're at right now, but I'm looking at more into like next week. If we break this 134.50, we close at it or below it, then I'm going to start really targeting the Euro Yen back to the short side, and that's going to have to be accompanied with some risk off activity, meaning that we're going to have to see the stock market come under a little bit of pressure in order for me to take that trade. Dale, I'm going to pass it back over to you, and I hear your mic there.
I'm here.
Cool.
Yeah.
And so I hear you're going to bring in one of our guests.
Yeah, and don't you think that's a good idea every once in a while?
I think it's great. I think it's, look, guys, you can learn a lot from people that are, just starting to trade. They're going through their ups and downs of going through the market. What are they looking at? How have they navigated through some of the upside and downside that they've experienced? I think it's important. I don't think it's you always have to, find like an industry expert. I think that's why chat rooms like our chat room that we have with ForexAnalytix, and here's the chat room, guys. I think that's why this is so important, because everybody in here, and you can see there's 76 of us in here right now. Everybody in here trades, and not everybody does it for a living. I think a lot of people here in this particular room do. But not everybody does, and everybody has ups and downs. And we talk out the trades that we're in, why we're doing them, what's working, what's not working. So that and I think that's important to bring in, just a listener to say, hey, this is what I've had,
it's good for
good success.
It's good for the person that has the courage to do it too, because it's kind of the next step. Because like you, Blake, and many others, what good is anything until you share it? So
right.
It's good for them to do it. It crystallizes what their own work. Like when you go through your overview and you're talking about things that you're considering doing and thinking about, it actually leaves a bigger impression on you than if you just think it, if you hear yourself say it. So it's a healthy exercise for people to do, in my
absolutely
anyway. Because
absolutely. So
yeah.
So have a great interview with who are you bringing in, Martin?
Yeah, Martin.
Awesome.
I'm going to make Martin the presenter right now. So,
awesome.
Thank you, Blake and Steve.
Thanks, Dale. Thanks, everybody.
This as usual. And Martin, I'm making you the presenter. Looking forward to this. And you're a courageous guy. They say that a lot of people fear public speaking more than death. So I guarantee you one thing, you won't die doing this, okay? So all you have to do is, hi, Martin.
Oh yeah, hi, how are you doing?
Martin, it's nice to meet you. How long have we known each other? I know it's the first time I've talked to you.
Probably for about a year, I think. I mean, I'm following you on Twitter for about a year.
Oh,
now.
okay.
And, so, I mean, we obviously don't know each other, but we had a conversation on a few occasions in the past.
Okay.
Yeah.
So, where are you from? Where do you trade from?
I trade from UK, and originally I'm from Poland, from Eastern Europe, from Poland.
Okay. All right. So you travel between the two places, and
well, I live in UK for the last 12 years. I used to live in Japan for a short period of time as well, and Brazil. So I basically move around. And,
wow, you're an international citizen.
Yeah, I could say so. Yeah.
Okay.
And
well,
I've actually started trading only a year and a half before, and basically I haven't got much experience. There's a lot of things which probably I still have to learn, but I'm getting there slowly. Okay. And yeah, I mean, you just ask if I want to share something with you guys. I'll do my best.
Okay, that's all anyone could ever ask of anyone or ourselves. So there is a screen share function if you want to show your screen. And
yeah, I mean that's the only problem I actually have with your platform, because I got two computers which I use for trading, and only one of them have microphone. So I'm happy to show you my screen, but unfortunately on my laptop where I got the microphone, I haven't got my MetaTrader platform, so I can only open my IG. But
okay, but I have a couple of questions to ask you. So you just started trading. What have you learned in the last, let's call it, year and a half from when you first looked at it? And I assume you're trading live, and I hope small.
I mean, I started actually big. I was extremely confident, and that was probably.
Yeah. I'm sorry.
I think I'm the biggest enemy. The biggest enemy is just basically myself when it comes to trading and my psychology and self-discipline. That's my basically biggest problems and obstacles, which obviously get me into trouble quite a few times already.
All right. So you started trading big. You're using a lot of leverage. How did that work out?
Oh, obviously, yeah. I got myself into trouble. The first big loss I actually had was last year, and I lost $15,000. That was in shorting Nasdaq. And I mean, I wasn't patient enough. That's the first thing. And the second thing, I basically I was procrastinating a bit. I was hoping the trend gonna reverse. I didn't set the stop losses right. I went to the optician. I came back and I was there. So I lost quite a lot of money in a very short period of time, trading with a large leverage, and basically I thought I'm invincible. Had quite a few months which were successful, and you know, I basically learned my lesson. I mean, I thought I learned my lesson because I'm keep doing some mistakes which are fairly similar to what I've done in the past. Maybe the leverage is smaller. Maybe I'm basically watching the charts more often, but still I'm making some other mistakes which are also putting me into trouble. Like let's say I've started shorting gold. I mean, partly because of you, Dale, actually, because I listened to your advice last time. But this, obviously the fault is entirely mine, and I got some short positions which I probably shouldn't basically open. But yeah, that's the way it is. I mean, it's a combination of psychology, watching the charts, and basically following up the information. And I didn't do that, and probably that's why I'm 30% in red right now in gold.
Okay,
So,
you know, I'm sorry, I don't recall being bearish gold, especially over the last month since I was a dollar bear. It doesn't make sense.
I remember. I mean, that was on the beginning of November. Sorry, of December 1st, and I think we were on the 1,250 level. And I think I asked you on Face, and I asked you on Twitter, do you think the gold's going to reverse now? And you said, how about it's going to go to 220? I think that's what you said. So that was my first loss.
But from 12, okay, so this is a great teachable moment for you. So the bearish from 1250, looking for 1220, but it went down to 1230. So you had $20 made on the trade, and you lost money on the trade. So I'm going to mentor you live. I'm going to mentor you live that that from now on, anytime you have that type of lead on a trade, you have to at least take partial profits. And a $20 lead to me in gold's a pretty good lead to at least pull your stop down to break even. And
no, absolutely. I mean, I'm the one to blame for it. I mean,
well, I'm not trying to put any blame down. I'm trying to make this a teachable moment, because I don't want you to do that again. When you have a lead, and if it's on a currency, I profess it. If you've been here in Face for a long time, anytime you have 40, 50 pips on anything that I call out, you go to the door, and then if the on half, and if the market keeps running, you're still there. And if it doesn't, the worst case scenario is you made money and pull your.
No, of course, yes, you're absolutely right.
You promise me you're going to try that.
I promise you, I'm never going to do this again.
Okay, promise me you're going to do it from now on, that you're going to start taking partial profits. And if you if you need to on your platform, not sure where you trade.
Normally I use IG. Yeah. Yeah.
Okay. To do two, say you do a 0.4 normally for a position, do 2.2s so you could trade out of one and keep one of them. Okay.
Yeah.
Is it a deal?
It's a deal. Yeah.
Okay. All right. Good. So, what type of technical analysis would you say that you've gravitated to?
Well, I'm not sure I'm going to be able to explain myself properly. I mean, I basically use a combination because apart from watching the markets and you know, doing the standard analysis, I basically use a combination of all the things which are actually happening. So I trade the news as well as I trade the technicals. I limit myself only to few things right now. I only try to trade gold. I mean, I got some position in the cryptocurrency, but I mean that's not my main trade. I only do Ripple. I don't do Bitcoin or anything like it. It's just not my thing. I have no trust in this in the cryptos, basically.
Okay.
Yeah.
Let me ask you this: what has been the biggest benefit of being in FACE? How long have you been in here since the?
I think I'm coming to FACE, like, obviously I don't do that on a regular basis, but probably for the last 6 months, and okay. Both you and basically and Blake and all the other guys. I mean that's an extremely useful thing for a trader like me, because you know I can watch how you guys do it, you know, professionally, how you make the analysis of the market. And you're also sharing some other ideas. I think the psychology of the market is also extremely important. I think it's a 50% success when it comes to trading, to have a right psychological approach to the market. Like let's say, for example, gold. I'm quite convinced the gold gonna basically reverse, and main reason for it is because I mean we had the low volume, we had the Christmas. I mean there were no big whales on the market. There was nobody who actually could hammer it down. I think there are quite a few points, psychological points, which could probably support my view on that the gold gonna reverse. And it's not only technicals. While the technicals are pointing up, I think the psychology might have a significant impact on it. So yeah.
Have you read any books that have been influential to you? Any authors or?
Yeah, I mean I've right now actually I'm halfway through Richard Schabacker Technical Analysis and the Stock Market Profits.
Okay.
I think it's a quite a good book, and I mean it's just basically. It's a basic stuff for a trader like me. It's like encyclopedia. It's almost 600 pages, and I'm basically getting it there. But it's just too much information to digest, and I'm probably gonna learn this over time, I think. And,
okay. Anyone that you consider that you talk about the markets with on a daily basis, or someone that you know that introduced you to trading, that's mentoring you?
I'll be honest. What I do for a living is I rent apartments. I got a service apartment business, and basically I was always watching the property market prognosis, especially for UK. And first, I actually got myself interested in gold, in a physical gold, as a hedge against, like, you know, as a crisis, and that was because of Peter Schiff. I'm pretty sure everybody knows Peter Schiff.
Okay.
So I had a conversation with him on a few occasions, and unfortunately I bought in a really, you know, I bought gold, physical gold, in a bad moment. That was just prior to elections in United States, when actually gold was quite expensive.
Okay.
And I was watching the market since then.
You have a big attraction to gold.
Not necessarily. I mean, that was my trigger. That was the first thing which I actually started trading, and I thought I have to master it. but I'm far from it. And then I was trading quite a lot of things, and I had the advice from Ira Epstein. I'm not sure if you know Ira.
Oh, sure, he's my generation.
Yeah, he's a very good when it comes to charting as well. So I finished his course in the past, which was an online course. But okay. Ira is a very good guy. He's extremely smart, and he just told me to limit myself to a few instruments, and right. I started doing metals only. So I limit myself only to metals, and I do one crypto, and that's all what I'm doing for now. Until I'm gonna master it, I'm not doing anything else.
Yeah, well, you see, Ira's been around quite some time. I think him and I are in the same tar pit, but he also recalls the floor, that there were traders that never left one trading ring or trading pit, and yeah. They didn't have to be portfolio guys. So also I learned in an interview, and that's why I love doing interviews, someone told me that their mentor said, if you can't remember the price of an instrument, you're trading too many. That's right. You should know the last price of whatever you're trading. So that's interesting to me. What's your favorite part of FACE? Do you stick around for the interviews, or do you bolt, and which analysts do you make sure you don't miss every morning?
Well, I'm definitely gold, but and dollar yen. But I mean, I'm listening to it all because I'm interested how. I mean, every almost one of you got different views. I mean, sometimes Blake differs from what you are saying, and oh, I forget the other person's name.
Steve Volge?
Yes, Steve. Yeah. I mean, you are not always on the same side of the trade, but merely is quite similar, and everybody analyzes the market in a different way. So it's really interesting to see those approaches to trading and just make something out of it. So I'm listening to the whole phase normally from the beginning to the end, and I'm not waiting for a specific thing, maybe apart from gold, but I'm always curious to see how people basically get their ideas.
Okay. So this is not your regular charting platform. You were bringing up the gold-silver ratio. You can't show that to us on this platform. Is that correct?
Well, I can basically try. Basically, I mean, in gold, I use the following instruments. I use the Bollinger Bands, for example, quite often. And I mean, as you can see, the gold was trading the Bollinger Bands. Was riding the upper edge of the Bollinger Band for the last 3 days. I mean, there is a rule which basically is saying that if the chart closes outside of the Bollinger Band for a 5% of time, normally the reversal is coming. So I even said this on Twitter yesterday, that's probably gold gonna reverse. And I mean, we have quite a few events coming. We got the FOMC meeting. On Friday, we got the non-farm payrolls, and some data is going to be published today. I think some people are gonna basically take the money from the table, and we might have some small reversal in place, which basically could follow the standard Fibonacci retracement levels, or providing it's gonna break the 1305 or 1306, around that. I mean, I haven't got the chart in front of me, which I normally use, so it's quite difficult to get this.
In fact, now that you bring up Twitter, now I know who you are. I remember your tweet. So Martin is the name. I don't think it's your handle, but I do remember. And you're always very nice when I get lucky and hit things on the button. You always acknowledge me for it. So now I know who you are, and encourage you to keep tweeting and showing your work there too. It's going to crystallize things for you. What's your favorite aspect of LAR? Is it, do you like the interviews? Do you enjoy when we're all talking? A lot of people like when there's 2 or 3 of us bantering and discussing about the markets. Or what's your favorite part of being here? And Go ahead.
I really like the interviews, I must say, especially when you get some, you know, traders of a bigger caliber, if I could say, and they are sharing their ideas. So I like this part. And obviously,
well, I have Martin Dembeck with me today.
Yeah, that's me. Yeah.
So yeah, I get, you know, top caliber guys. You know, let me say something to you, Martin. The most famous guys aren't always the best traders. And I like to bring people in that may not be as well known, because just because you're popular and you have 50,000 followers doesn't make you any more talented than someone who has 400. So, yeah, and when you're doing your research and intelligence gathering on Twitter, keep that in mind, that you will find hidden gems in people that aren't famous, that all they do is make money. Not always, but just usually.
Yeah, I mean, normally when you have a bigger trader, they're probably, it's not only limited to trading, it's limited to all kind of business. I mean, when you are doing something for many, many years, you basically, you got some routines, you do the same thing over and over in the same way. And so when you have fresh, when you have fresh traders, when you have young people, I'm fairly young, I'm in my 30s, but they look at things from a different approach, and sometimes it's not necessarily wrong. So it's, I think it's quite interesting thing that basically their thinking might influence your approach to trading as well. And I think the industry of trading is also changing. I mean, obviously, I haven't been around for a long time, but you have more and more young people being introduced to the trading platforms, and I think the market is becoming more violent. Obviously, it's a low volume trading, but there's a lot of people, you know, who is actually doing this, and you can see this thing in cryptos. That's why I think that cryptocurrencies it's so violent. It's just going up and down on a very large scale, because there is a lot of people who are basically emotional. You know, if it's going down, it's just going down. People are just running away. They are scared. It's nothing that big traders would probably do.
I have a question from Jay Kana. Why did you choose the markets and not the casino?
Why did I choose the market, not the casino? Well, I'm not a gambling person, and I think market is more predictable. And quite frankly, I mean, last year I have more wins than I had losses. You know, I end up here making $15,000 in total. So I think, you know, it's not actually bad, considering that I put quite a lot of money and I didn't lose in the end. I don't think it's a casino. And maybe this year I didn't start well, but you know, there is still 12 months remaining. You know, and
you have a great, you know what? I think you're going to be successful. You have a great attitude, and that was a great answer, because you know, a lot of people are saying, you know, there is no difference, and there is a difference because you have reasons, contingencies, things that give you market messages that tell you there's a reason to assume risk, and then if that reason is taken away, to eliminate the risk and get out, and also things that tell you what the potential of the trade is for. Do you answer all those questions before you press your button? Why am I getting in? Where am I wrong? And if I'm right, what am I looking for?
Yeah, I mean, it's basically important to plan every trade, and in my case, because I have quite a busy life. You see, I'm stuck in the trade right now because I had a surgery in December, and basically I couldn't close the trade before, and I end up being in hospital longer than I predicted. And when I was out from hospital, I was all in red, and I just couldn't close it. I said, it's gonna reverse. It's gonna reverse. It didn't. But I mean, those things basically happen, and you have to plan in advance every single trade. You have to have a strategy, your exit points, your starting points, and you just have to follow this up on a regular basis. So I mean, trading, I don't think it could be.
If you're on the go, and even you know, unfortunately, you know, no one likes to be in the hospital. But if you're on the go, you know that our phone app would would be excellent for you because you're busy in business doing other things, that the push alerts would keep you abreast of things happening when we're breaching certain important technical areas. I'm just assuming that you're not a subscriber. I would, if you're not.
I'm not, but I'm definitely gonna.
Yeah, I just think for busy people, it's a must-have, because you can turn your head in this business, and if you're waiting to get home to your platform, look, you miss things sitting in front of your platform. How many more are you going to miss not being at your platform? And who wants to be a prisoner to your platform? So just a suggestion for you. And I will say this will be the commercial part of it. I've never been part of a more competent team of analysts with very good ideas every day. So I want to take this chance to wish you a great New Year. I'm not sure what health issue you had, but when I say Happy New Year to you, Martin, I don't just mean in your trading account. I mean in every way. And you have the courage because you're doing this. You have the courage because a lot of people would be afraid to do what you just did. And leave your Twitter handle so that we could post this interview. And I hope there's a $30 break for you in gold. And appreciate you being with us and being my guest today and addressing the community. It was a pleasure speaking with you. So I guess you're gone, Martin. All right, so that's a wrap for us, everybody. See you, Abdul. See everybody. Good hunting the rest of the day. See you in the other chat room. Remember, don't just count your pips, count your blessings. Everyone thank Martin for, you know, being vulnerable, talking about his experiences. Yeah, there you go. Mike's thanking you. Okay. I'll see everyone tomorrow. Thank you, Blake Morrow, Steve Volge. Will I give them a chance? I'll give you a chance, Jay, anytime. Let me know. So good hunting the rest of the day. See everyone tomorrow for investing.com Thursday. Good hunting. Thanks for your attention. Adios.